So you're interested in Chicago real estate, but maybe real estate funds seem a little intimidating.
Yeah,
Like, where do you even begin?
right.
Well, today we're diving into all that.
Okay.
We're going to try to demystify these real estate funds.
Sounds good.
And to help us do that, we've got insights from Chicago real estate expert Michael Linton.
He's a great resource, really knows his stuff.
He does, yeah. He's got this website, chicagodealflow.com.
Yeah, I've seen that. Really insightful stuff.
It is lots of good stuff on there for anybody who wants to learn more.
For sure.
So we'll kind of weave in some of his insights into our conversation today.
Sounds good.
But, before we even get into the weeds about the funds themselves,
Yeah.
can we talk about Chicago? Like, what makes it so unique? Why is it even a good place to consider real estate investing in the first place?
Well, it's funny you should ask that. It's actually a really good question.
Okay.
Because a lot of people, they just jump on the bandwagon.
Right.
They hear real estate, they hear Chicago, and they're like, okay, I'm in.
Let's go.
But you really got to understand,
The why.
yeah, what makes it tick.
Yeah.
And Chicago's got this really interesting mix of things going for it.
Okay.
So unlike, say, a city like San Francisco,
Okay. Tech heavy.
exactly, right, where it's all about tech, tech, tech,
Yeah.
Chicago's got this surprisingly diverse economy.
Oh, interesting.
You've got major players in finance, of course,
Oh,
but then
yeah.
you've also got healthcare, manufacturing, even tech is growing there. So it's not putting all its eggs in one basket, which is really good from an investor standpoint.
Yeah, I was going to say that makes it a little bit safer, right?
Absolutely. Yeah, you're not betting on just one industry to do well.
Exactly.
And on top of that, within that stability,
Yeah.
you've got these pockets of growth,
Okay.
neighborhoods that are really transforming themselves.
Oh, like where?
Well, one that comes to mind is Fulton Market.
Okay. Yeah, I've heard of that.
It used to be all meat packing, like industrial.
Oh, yeah.
But now it's like this trendy hotspot.
Right.
Tech companies moving in, Michelin star restaurants.
Fancy.
Right. So that kind of evolution, that creates some really interesting opportunities for investors.
Okay. Yeah, I'm starting to see the appeal here.
Right.
But I'm still stuck on this idea of a fund. Because, I think about real estate. I think about like buying a house or like a rental property.
Right. The traditional way.
Yeah, so how do these funds even work?
So think of it this way. It's like a group project.
Okay.
But instead of everyone just, bringing their own stuff,
Right.
you're all pitching in to buy this really awesome, sophisticated toolbox.
Okay.
So you're pooling your money with other investors, and that money is then used to buy properties.
Okay.
But not just any properties. They're targeting specific types, depending on the fund's strategy.
Okay, so it's like a team effort,
Exactly.
but it's managed by professionals, right?
Exactly. That's the beauty of it.
Okay.
So you're not the one dealing with tenants in the middle of the night,
Oh, thank goodness.
right? These fund managers, they're the experts. They know the Chicago market inside and out.
Yeah.
They handle everything from finding the properties, negotiating the deals, managing the day-to-day stuff.
Okay, so less hands-on for the investor,
Yeah, exactly.
but potentially like way more strategic than trying to do it all yourself.
Right. You're leveraging their expertise.
Okay, that makes a lot of sense.
Yeah.
But there's got to be like a million different kinds of funds out there.
Oh, there are.
So how do you even begin to choose?
Well, that's where understanding the different strategies comes in.
Okay.
Because they're not all created equal.
Right.
Some are very conservative.
Yeah.
Others are pretty aggressive.
Oh, interesting.
And everything in between.
So it's a whole spectrum.
Exactly, yeah. A whole spectrum of risk and reward.
Okay, I am ready to dive into that spectrum.
Okay, let's do it.
Let's start with the most conservative.
Yay.
What do we got?
All right, so at the lower end of the risk spectrum, you have core funds.
The war funds. Okay.
Yeah, and picture this, all right?
Okay.
Those impressive skyscrapers you see towering over the Chicago River,
Oh, yeah.
those are your classic Class A buildings.
Okay.
Prime locations, always in demand. Tenants paying rent like clockwork.
So they're like the steady eddies of the real estate world.
Exactly. They're reliable, they're consistent.
Okay.
You're not going to get rich quick,
Right.
but you're looking for that slow and steady kind of return.
That makes sense. So like if you're looking for something that's not going to keep you up at night.
That's it, exactly.
This is fit.
Yeah. And Michael actually gave a great example.
Okay.
Imagine investing in a fully occupied office building in the Loop.
Okay. Yeah. Prime real estate.
Exactly, right in the heart of it all.
Mm-hmm.
Now, it might not be flashy,
Right.
but that consistent rental income, that can be very attractive.
Okay. Yeah. Especially in a market as established as Chicago.
Exactly. Yeah, it's not going anywhere.
Makes sense. Makes sense.
Mhm.
But what if our listener is feeling a little bit more adventurous?
Okay.
Like maybe they're willing to tolerate a little bit more risk
Yeah,
for a potentially higher return.
I like where you're going with this.
What's next on our risk ladder?
All right, so stepping up that ladder, we have core plus funds.
Core plus? Okay, so it's like core,
Mm-hmm.
but with a little something extra.
Exactly. It's like core, but with potential.
Okay, I like the sound of that. What makes them plus?
So they might target properties that need a little TLC,
Hmm.
maybe a little renovation here, a bit of repositioning there.
So not a complete jet job.
No, not necessarily, more like a refresh.
Okay.
Or they might focus on up-and-coming neighborhoods,
Oh, interesting.
like, say, Logan Square.
Logan Square.
It's
Taken.
really experiencing a surge in popularity right now.
What's driving that?
Well, you've got a lot of young professionals moving in,
Yeah.
They're attracted to the energy, the restaurants, the nightlife.
Sure.
And as more people move in, property values tend to rise.
Makes sense. Supply and demand.
Exactly. Exactly. So you're kind of riding that wave of gentrification,
Okay.
hopefully seeing some nice appreciation along with those rental yields.
Right, right. So you've got that kind of built-in growth potential.
Exactly.
Okay. That's cool. That's cool.
Yep.
But let's say, our listeners like, all right, I'm ready to kick it up another notch.
Okay.
Let's get a little riskier. What's next?
All right. So now we're moving into value add territory.
Value add funds. Okay.
Yep. These are for investors who see potential where others might just see a project.
Okay. So we're talking more than just a fresh coat of paint here.
Yeah. Yeah. Think major renovations, maybe a complete overhaul of the management strategy.
So it's like flipping a house, but on a much bigger scale.
Exactly. It takes a certain kind of investor, someone who's not afraid of a challenge.
Right. Because I imagine these value add projects can get pretty complex.
Oh, absolutely. You need a team that really knows what they're doing.
Yeah. You can't just be a weekend warrior with this stuff.
No. You need expertise in construction, zoning, market analysis, the whole 9 yards.
And that's where partnering with a local expert like Michael can be so valuable.
Absolutely. Someone who really understands the ins and outs of the Chicago market.
Right, because the stakes are higher with these value-add deals.
Oh, for sure. But with higher risk comes the potential for higher reward.
Okay, so if you're willing to roll the dice a bit,
And you've got the right team in place?
there's a chance to make some serious returns.
Exactly. That's the name of the game with value add.
Okay, I'm feeling like we need to take a breather
Yeah.
because we're getting into some pretty high-stakes territory here.
All right. You ready to climb a little higher on that risk ladder?
Oh, there's more. Okay, hit me with that. What's at the very top?
At the top, you've got your opportunity funds.
Opportunity funds. Okay, this sounds intense.
It can be. These are for investors who truly have a stomach for risk.
So we're talking about those really distressed properties.
Sometimes, yeah, the ones that other investors wouldn't touch with a 10-foot pole.
What kind of properties are we talking about here?
We could be talking about buildings that need a complete gut renovation.
Okay, so like a total transformation, not just a little sprucing up.
Exactly. Or we could be talking about projects in neighborhoods that are just starting to show signs of life.
High risk, high reward kind of thing.
That's the idea. You're betting on the future of that neighborhood.
So you're not just buying a property, you're buying into a vision.
Precisely. And that vision often requires a lot of capital, a lot of time, and a lot of expertise to execute.
It's like those before and after photos you see,
Exactly.
where it's like, wow, I can't believe that's the same building.
It's amazing what a little bit of vision and a lot of hard work can accomplish.
Yeah, but it's not for the faint of heart.
Definitely not. Opportunity funds are definitely not for everyone.
Okay, I'm starting to think about all the financial hurdles these properties must be facing.
Sure.
Like they're probably struggling with debt.
Right. Oh, absolutely. Many of these properties are saddled with debt.
So is there a way to invest specifically in that debt?
There is. And that brings us to our final type of fund, distressed debt or mezzanine funds.
Okay, this sounds even more complicated.
It can be, but stick with me. It's actually pretty interesting.
Okay, I'm all ears. Break it down for me.
So imagine a property developer. They've got this big project. Everything's going swimmingly.
Okay,
And then, bam, they hit a snag.
what kind of snack?
Could be anything. Construction costs go through the roof.
Okay.
Maybe there's a change in market conditions. Or maybe they just made some bad decisions.
It happens.
It does. And suddenly they're struggling to make their loan payments.
Oh, that's not good.
No, it's not. And that's where the distressed debt comes in.
Okay, so the loan itself becomes kind of like a troubled asset.
Exactly. It's not worth as much as it used to be because the borrower is struggling.
Makes sense. So where do the funds come in?
Well, distressed debt funds specialize in buying up this kind of debt.
So they're like vultures.
Kind of, but it's not necessarily a bad thing. They're providing liquidity to a market that desperately needs it.
Okay, so they're buying these loans at a discount.
Exactly. Because they're risky, there's a good chance the borrower might default.
And if that happens?
Well, the fund could foreclose on the property.
So it's like a high-stakes game of chicken.
In a way, yes, but it requires a lot of skill and expertise.
Because you have to know how to turn that distressed asset around.
Exactly. You need to be able to assess the
Come
situation
up with a plan.
and then execute it, and that's not easy.
No, it sounds pretty intense.
It can be, but for those who can handle the pressure,
There's the potential for big rewards.
big rewards, exactly.
Wow, we've gone from those nice, stable core funds
Right.
all the way to these high-stakes, distressed debt funds.
A whole spectrum of options.
That's a lot to wrap your head around.
It is. It really is. But that's why it's so important to do your homework.
Right, and figure out what level of risk you're comfortable with.
Exactly. Because what's right for one investor might be completely wrong for another.
So how do you choose? Where do you even start?
Well, it boils down to a few key questions, some soul searching.
Okay, lay it on me.
The first one, and it's the toughest one, how much risk can you really handle?
Okay, so being honest with yourself.
Exactly. Are you going to be up at night if your investments dip a little?
Right.
Or are you okay with riding out those ups and downs?
Because a core fund, that's going to feel very different from like a distressed debt fund,
Night and day, really.
even though they're both real estate.
Right. The underlying asset might be similar, but the approach, the risk profile, it's totally different.
Okay, so risk tolerance, that's number one.
Number one, for sure. And then you gotta think about your timeline.
Okay, so like how long do you want to have your money tied up?
Exactly. Are you looking for a quick return, or are you playing the long game?
Because some of these strategies are going to take years to really play out.
Years, sometimes even a decade or more.
Wow. Okay, so patience is a virtue.
It really is, especially in real estate.
And I imagine that ties into your overall financial goals too.
Absolutely. Are you saving for retirement, your kids' college fund, or just trying to grow your wealth over time?
Right, because your strategy is going to be very different depending on what you're aiming for.
Exactly. There's no one-size-fits-all approach.
Okay, that makes sense. So we've got risk tolerance, timeline. What else?
The last thing I'll say is think about your own personality.
Oh, correct.
Are you someone who likes to be hands-on, or do you prefer to delegate?
Because with some of these funds, you can actually be pretty involved, right?
You can. There are funds that give investors more transparency, maybe even a say in which properties they invest in.
Interesting. So it's not always just a black box.
Not necessarily. It really depends on the fund and the fund manager.
Okay, so you really got to do your research.
Absolutely. And don't be afraid to ask questions.
Yeah, that's good advice.
Knowledge is power, especially when it comes to investing.
Well said. And speaking of knowledge, I think we'd be remiss if we didn't mention Michael Linton's website again.
ChicagoDealFlow.com, it's a fantastic resource.
It really is. Tons of great insights on the Chicago market.
He really breaks down those complex topics in a way that's easy to understand.
He does, and he's got that local expertise, which is so valuable.
Absolutely. He knows the city like the back of his hand.
So for anyone listening who wants to dive deeper into this world of real estate funds,
I highly recommend checking out his site.
definitely it's a great place to start your research.
And your journey.
Well said.
Yeah.
Well, on that note, I think we've covered a lot of ground today.
We have, from core funds to distressed debt, we've really spanned the spectrum.
And we've learned that Chicago is a unique market.
Full of opportunities, but you got to know where to look.
Exactly. And you got to have a strategy.
Absolutely. Don't just jump in blindly.
Words to live by. All right. Thanks for joining me today. It's been a pleasure.
It's been fun. I always enjoy talking real estate.
Likewise. And to our listeners, thanks for tuning in. We'll see you next time.